Ladies and gentlemen, we will now turn to our final panel discussion of the day, titled Future Developments of the Global Currency System. Now, the global currency landscape is undergoing major transformation, and the next session will explore how fintech innovation, crypto assets, and evolving monetary strategies are shaping the future of global payments and financial sovereignty. To lead this discussion, please welcome our moderator, Mr. Rui Correia, CEO and Chair of the Board of Education, ACI-FMA. And joining him on stage, we've got the following distinguished panelists. Mr. Paul Bluestein, award-winning economic journalist. Mr. Namir Khan, Chairman of the MENA FinTech Association. Mr. James Kemp, Managing Director, GFMA's Global FX Division. And Dr. Tom James, CEO and CIO of Trade Flow Funds. Please join me all in welcoming them on stage.
Thank you very much. Good afternoon, everyone. First of all, I would like to thank the board of ICA for organizing yet again another magnificent conference, and also to the UAE FMA. We're very happy to be partners, long-time partners of ICA, and of course, UAE FMA is our affiliated association here in UAE as well. So I'm very happy to moderate this panel, and being accompanied, of course, by some distinguished speakers. And I realized that we are just on that particular slot just before going to lunch. So we're going to make a very interesting, but also a very concise discussion. I hope we go that. And I'll go first to James. You have, of course, the panel is on the screen. I'll go first to James. James, we just heard about a couple of months ago in September, the results of the BIS triennial survey. So normally they are organized in April. We saw that the daily volume of the FX market has risen from $7.5 trillion to $9.6 trillion. Of course, we have more details on the figures when they publish the full report in December. But we've also heard that the US dollar is responsible for being in one side of nearly 90% of all trades in the FX market. This survey, for the ones that don't know, normally it's calculated or measured in April, and of course this April we had a Liberation Day, but there's no doubt that the growth in the FX market is also very, very substantial. So James, in your position as GFMA, as you represent the 25 largest FX dealers in the market, what are in your view the reasons for this growth of the FX market over the last few years?
Yeah, thanks, Rui. Can everyone hear me on this? So I think that it's very clear that you've seen a dramatic growth in the FX industry in the last 3 years, particularly to April, up about 30%. But clearly that corresponded to the Liberation Day. And I think what it really states is that the FX market is about global trade and investing. It's the oil, if you like, that allows currencies to be converted. I look after the top 25 global institutions in the wholesale markets, and we saw a huge growth from the previous survey back in 2019 or 2016, of about 5 trillion a day, moving up to the 7. But to go to the 9.6 tells you a few key points about the FX industry. It underpins global trade and investing. Sonny raised it earlier on. People had to start to think about hedging, and we saw a dramatic increase, about 40% of trading in the spot rate, 60% in the forwards market, and doubling of the options market. This is all about demonstrating that FX is incredibly important to the global economy. And if we turn our mind to the UAE and to the Middle East, North Africa region as well, there's no doubt that we're seeing an increase in volumes in this region. Anecdotally, you'd probably say it's up about a third, 30% year on year. It's a very attractive region from the point of view of time zone, but also you've got a huge amount of investment in this area as well. So I think overall, an FX market that continues to grow, an FX market that follows global trade and investing, an FX market that is growing in this region, and I think we're likely to see that continue. Just a caveat, clearly we'll have some more results coming out in October when a number of central banks report. I think it will be coming down. I think we probably hit a high water mark there, but there's no doubt that the trajectory is upwards.
Thank you very much for that, James. Paul, I'll actually bring on to you. We talked like nearly 90% of all trades have the dollar at least in one side. But we've been hearing for decades that actually the dollar will lose the dominant status as the currency of the world. Even when we go into some cryptocurrency enthusiasts, they say that Bitcoin or the blockchain-based monetary units will replace the dollar. Of course, we always hear a lot of the economists, given the growing debt of the US economy as well, that the dollar will lose its status. We also hear as well that the RMB will take over. Do you really think that the dollar will lose the dominant status of this currency for the foreseeable future? And do you really think that combining TradFi and DeFi, do you really think that we are still very much on a strong dollarized world?
Yes, I do think we're still in a strong dollarized world. This is a question I've been wrestling with for the past 5 years. I have a book that just came out in March, published by Yale University Press, King Dollar, the Past and Future of the World's Dominant Currency. So I've been giving a lot of thought to this question. And the conclusion I come to, it's stated very, I'm quoting I think I'm quoting verbatim from the very first chapter. I say that the dollar's dominance will remain impregnable, barring catastrophic missteps by the U.S. government. So I'm going to come back to that caveat in a minute. And my reasons for saying that are, that the dollar, it's not just that the dollar has repeatedly defied doomsayers. I mean, there's all these junctures in history, the end of the Bretton Woods system, the huge inflation of the 70s, the swelling of U.S. trade deficits in the 80s and 90s, and the rise of Japan, the rise of the yen, people were talking about the yen supplanting the dollar, the global financial crisis, the rise of the euro, people were talking about the euro, the rise of China. Every one of those junctures, right? There were predictions that the dollar would lose its dominant role, and they always turned out to be false. But it's not just that the predictions turned out to be false, it's that there are very good reasons for this. The dollar, pretty much uniquely among currencies, has two features: an open capital account, money can flow freely across borders, and the depth, breadth, and liquidity of U.S. financial markets, and particularly for U.S. obligations of the U.S. government, which is so crucial in a crisis because people need to be able to raise cash to pay their obligations. U.S. Treasuries are the one instrument that they're able to do that in large volumes. So that's a very unique quality that the dollar has. So when my book, now I mentioned my book came out in March, right? And it was just within days after that we had Liberation Day, and the markets went crazy, and we had, Sonny Kapoor talked about the confluence of events with the dollar falling and stocks falling and U.S. Treasury bonds falling. And there was a lot of predictions then. It was yet another episode, another bout, another round of predictions. Oh, this time it's really different for the dollar, right? Now, my publisher came to me soon after that and said, we're going to have a paperback edition, and you need to write a new preface that takes account of current events, recent events, and it was very tempting to adopt this narrative. Yes, these are the catastrophic missteps that I warned about, but I don't think it's true. I do not. I still think. I mean, I think a lot of those actions taken by the Trump administration could lead to a financial crisis, particularly the attacks on the independence of the Federal Reserve. But I do not think that it will dislodge the role of the dollar. And let me just explain a little bit why I'm so, what you might call stubborn or pig-headed about this. You mentioned the BIS data. If there was one moment, one aha moment, one moment where I was just blown away by data supporting my argument that the dollar is durably dominant. It's when I looked at the BIS data on FX swaps. This is the market, a gigantic market. I'm sure there are people in this audience who are active in this market. It's a market where the biggest actors in the financial system, multinational companies, banks, hedge funds, pension funds, insurance companies are hedging themselves against fluctuations in currencies. What are they? What is the currency that dominates this market? It is the dollar, because they're using the dollar for so many different purposes, for investing, for lending, for borrowing, for exporting invoices. And it just seems delusional to me to think that all of that activity where the dollar is the dominant currency could possibly be unwound without enormous cost, enormous difficulty, and taking an enormous amount of time. So in my preface to the paperback, it'll be coming out next March, I basically say, no, I still have confidence in my basic thesis. I'm not entirely happy about that, because the U.S. government uses the dollar as a weapon, sometimes in really awful ways. But I think we have to analyze the world as it is, rather than as we would like it to be.
Thank you very much, Paul. Still on that topic of the dollar dominance, let's bring in Namir and talk a little bit of another part where we do see quite a lot of US peg or US dollar peg. Let's talk about stable coins, Namir. The interest on that is growing all over the world, not just in the US, but maybe in the US because as a consequence of the Genius Act. What I wanted to ask is that regulation really requires that issuers of dollar peg stablecoins need to back them with high quality assets. And actually just recently, one of our partner stablecoin standards actually released a paper, a stable check paper, which actually talks about or helps issuers and also investors as well to define what high quality liquid stablecoins are. Do you think this kind of methodologies will help, again, investors and issuers overcome the risks that this kind of assets have, like for instance, like custody, trust of issuer, operational issues? Do you think this kind of initiatives would help us to trust more stable coins, which probably are not so stable as the name infers?
Okay, so thank you for, can you all hear me? Yeah, great. Stable coins is definitely by far the hottest topic, not just in the US, but across the region. So as the chairman of the association, we work with all the different countries from Morocco all the way to Oman. Typically, all the markets and all the regulators, and I can name them, Oman, you're looking at Oman, countries like Iraq, we're looking at UAE itself. Stablecoins is becoming, it's understood that stablecoins is going to become a very important fabric of the global trade. That has been clear. Now, that is point number one. Number two, it's not just state-backed stablecoins that are emerging, but institutions have their own versions of stablecoins emerging as well. Because institutions have also embraced the fact that yes, this is primarily the real FX infra that we need in order to, stay up with the game. Third thing is regulations. UAE is one of, after US, in UAE there's a dirham-backed stablecoin that is being launched, right? So that shows, and then of course it's being launched with the regulations behind backing it. Fourth thing is that the stablecoin adoption on a retail level has become quite dominant as well. Countries like in Lebanon or countries where you have high volatile currencies, people are hedging by basically having stable coins with them, right? So that has become, instead of keeping dollars under your mattress, people are now moving towards adopting stable coins. That is a much more safer way of acquiring a currency, right? So since the adoption has become really high, you need regulations for that, and you need to control it. So from our perspective, from a fintech layer as well, where we see a lot of these fintechs now adopting and using stable coins, for cross-border settlement, number one. Number two, locally, of course, we have instant payments, but for cross-border, it becomes really critical. It is the most important thing today is security of the consumers and the users as the adoption goes high. So all in all, yes, regulations are absolutely important and critical. Stablecoins are becoming a very important, as we speak every single day, a very important force of any economy. Every single country that we engage with in the Middle East and North Africa is now either building up their digital currency framework or have already launched it, or at least spoken about their intent to launch it very soon. So yes.
Thank you very much, Manvir. Tom, I want to bring you on. So we're talking about a particular or the most dominant fiat currency. We talk about stablecoins, but we haven't covered CBDCs yet. For example, in this region, particularly for the dirham, there are still issues on the interoperability between domestic private issued stablecoins and CBDCs. You have a practical and vast experience in helping business from all sides on participating in global trade. Do you believe that we need to have a coexistence between all these assets in order to promote the business of those industries? How do you see that global interoperability for this ecosystem? Do you really believe in that convergence as necessary for us going forward?
Yeah, I mean, at TradeFlow, we've been using stablecoin. We started borrowing and issuing regulated debt in Switzerland in stablecoin as early as 2023, with institutional investors actually investing in our funds, and we then enable physical commodity trade around the world. So it's all cross-border. So we see all the pain points and the issues using traditional payment rails through banking systems, through credit card systems. And certainly since the beginning of this year, we noticed a massive increase in the number of people that wanted to pay us in stablecoin, be that primarily Tether, US-backed, or USDC, which is the first one we were able to use, as that's a regulated, and also it even has a rating from S&P, so that it's as good as cash on the balance sheet, according to our fund administrators and our auditors. That was good. So we've seen a massive jump in that. I mean, Tether, I think, posted $1 billion of monthly turnover just a few months ago. And on average for the last 12 months, 700 billion turnover. Now, these are small numbers compared to fiat currency movements, of course, but that's 83% increase just in terms of stablecoin turnover as part of the crypto world. 30% of crypto transactions now stablecoin. Massive jump in use because it is, at the moment, cheaper, better, faster. And in some countries, small, medium-sized firms that are paying us for physical commodities are saying, our bank doesn't have dollars. It's going to take 2 weeks before they can send a SWIFT to you, but we could send you USDC. And I think that issue is promoting the more development of the central bank currencies, digital currencies as well. The way we're seeing it at the moment will be dual rails, we need, but the central bank ones will be more for domestic, with the privately led US dollar backed ones at the moment have already gained a lot of traction internationally as a settlement unit, as a settlement means. And because they're on the blockchain, there is a lot of now institutional grade security, the control wallets, which is there now. The regulation is catching up, where we can borrow and use stable coins as a regulated asset manager. So it's very, very exciting. And the fact that it is digital means that we can also automate a lot of the reconciliation. And I think the most exciting thing is around what they call smart contracts, where we're literally saying, we're moving goods from A to B, these are the people, this is what people have to do. If that all adds up, 1 + 1 = 2, move this money. And we can automate and scale. And of course, we heard about AI. You shove AI on top of that, and AI agents with some logic and actually decision making, that's where I think we'll see the friction that is there in the money system at the moment disappear. And that, I think, will also boost economic growth, because instead of 4 or 5 days and lots of manual processes, you're getting very, very fast settlements.
And just to add, like the element of cost, I was just quickly checking a recent transaction made by one of my colleagues, almost $1 million, almost $1 million transaction, 80 cents the cost for the entire transaction.
Yeah.
So that plays an extremely critical role as well for incentivizing, mass user adoption.
Yeah, absolutely, and there's, and I think we're seeing obviously banks. Some banks are now having subsidiaries that are doing custody, institutional custody, quality custody for digital assets like stablecoins, and we're seeing the development of cross-FX stablecoin markets developing. In the future, maybe we won't even notice the difference. We won't know whether we're trading fiat or stablecoin. It'll just all be merged into one thing.
James, let me bring you on again and talk a little bit about the FX code. You have been involved in the FX code since the initial meetings, 14, 15, something like that? And the code was then launched in May 2017. And for the ones that don't know, the code is a set of global principles for promoting good market practices in the FX market. And so the code was launched in May 17, so 8.5 years after the code was launched. We actually heard this year that the Central Bank of the UAE has signed the statement of commitment for the FX code, but adherence is still low in some jurisdictions, particularly here. Only the Central Bank of UAE has signed to that statement of commitment. In your opinion, James, what can we do more to incentivize or to encourage participants to adopt the code in more jurisdictions?
Yeah, thanks, Rui. And I guess we're coming slightly off topic on stablecoins and AI, which we could talk about for hours as well. Just to sort of recap on the global code, one of the key parts about the FX market is it has more participants than any other asset class. It is the most global of all asset classes. By its very nature, it's about cross-border payments which need to be converted. So if you want to do that, you want it to be as frictionless as possible in terms of standardization of process, etc. The global code, I worked with the UK government and led the FX work on this as part of the Fair Effective Markets, is a set of 55 principles that covers everything from ethics through to execution, through to settlement, risk management, etc. There are over 1,000 participants in the market who've signed up, 40 central banks. As you say, fantastic to see the leadership of the UAE Central Bank in the region to put it in place here. Why is it important? Well, as this region develops as a key trading hub, clearly more and more companies are coming here, more and more capital flows. And if you like, you could go down the legislative route, but it's a global market. So actually the global code seeks to standardize as much as possible the rules of the road. And it brings a sense of confidence to the market. It brings a sense of surety about how people are trading FX, which we want, right? We don't want any more scandals. I lived through the 2013 scandal. It was not pretty. Yeah, we want to avoid that. So I think the more central banks take leadership, the more firms look to the global code as a way in which they conduct their FX business in this region. As it grows in importance, I come back to the size and scale of the market here, which is taking off. The number of participants, hedge funds, asset managers, sovereign wealth funds, etc. It's a vitally important part of that. So I would really recommend, if people don't know the global code for FX, that you take a look at it. There are training programs. I know that the ACI has one as well to be able to train staff, etc. But it is a vitally important part of this industry because legislation will follow if there's more scandals. We would prefer a market that self-regulates, that looks at how it operates, and the FX code is absolutely vital to that.
Perfect, thank you for that. Namir, I'll go to you and picking up on what James has mentioned as an FX trading hub. You lead the MENA Fintech Association. It's ranked among the world's top 4 fintech bodies, and the region is still well positioned for growth. UAE is amongst one of the top 10 countries globally for fintech investment and a leading fintech hub as it enjoys a supportive regulatory environment, a growing fintech ecosystem, and also a strong commitment to innovation and entrepreneurship. Can we pick up on that example, excellent example, and make the UAE as a main financial hub for FX trading as well in the future?
I think that's been the approach. Having conversations with the central bank and, of course, the leadership of the country. The focus has been not Singapore and London, the focus has been to set standards that can be followed by other markets. And of course, that means that UAE becoming the capital of capitals, of course, becoming the financial hub. In terms of the initiatives that are taken, you always pick up the regulatory framework, because this is not, I would say, a bottom-up market, this region in particular. This is a top-down where the regulators instead are on the forefront versus the market itself. So the regulators would learn from other markets and then try to be amongst the first ones to launch groundbreaking initiatives. In terms of the enablement, if you look at the regulations for even digital assets, Abu Dhabi Global Markets was amongst the first ones in the region. Then we have Virtual Assets Regulatory Authority, the first regulator in the entire world focusing on digital assets. Now, it might look that we're talking more about digital assets, but if you look at digital assets, the biggest product is stable coins by the end of the day, right? That has emerged. So it's very critical to have a regulator that is on the forefront for that. Then third would be the most recent regulation that has come out for CAT4, for cross-border, by Central Bank of UAE. I think that is another testament by the regulator over here to showcase the importance of cross-border and ensuring that the steps that we take are in line with the growth of the industry itself. So for example, I mean, we have, if you look at cross-border trade happening over here in the market, or cross-border transactions or FX transactions happening to different parts of the region, because we have a lot of expat population over here, and of course money goes in different parts of the world. Then we had the rise, if you complement it with different super apps and different fintechs who started offering the same services to remit funds in different parts of the world. Now, there was a question, oh, there's a lot of funny transactions that are happening. But again, the regulator waited for the volumes to significantly go on the higher side, and then a regulation comes into place. That makes a lot more sense. Then, once the CAT4 came into play, what has happened? Most of these players are now going to be offering licensed rails, and at the same time, or leveraging licensed rails versus just offering services for cross-border solutions. So by the end of the day, if you look at it, in terms of execution, the regulations play an extremely critical role. UAE has been taking the steps and will continue to take those steps. In terms of the policy and the frameworks that are being established, yes, there is going to be more policy-focused conversations, focus on stable coins, focus on digital assets, and most importantly, leveraging them. I'll give you another example. When the US Senate was working with the digital assets framework, they had reached out to us in terms of understanding how WARA, FSRA had established those digital assets rules and regulations. Point being that building and establishing standards that are potentially then used by other parts of the world who are definitely quite mature, but used by them in order to establish their frameworks. So these are small steps that may not be magnified, but certainly small steps that create a dent in terms of where the market is headed, and most importantly, the North Star is, again, not London and Singapore, this UAE becoming the center stage as a financial hub.
Thank you very much, Samir. Tom, let me ask you a little bit, just shifting a little bit the issue here. We have seen, apparently, a successful move of the shortening of the settlement cycle in the US back in May 24, and now we've seen the UK and the European Union moving to that shortening to T+1 in October 27. So we're talking about, and we've talked a lot of this conference about the rapid advance in technology in recent years, but when we compare that to the FX market, particularly on settlement, and we're talking about also stable coins being used for settlement as well, there's always a worry about the FX market over the last few years, which is the rise or the growth in settlement risk. In your view, and this is kind of a provocative question, but I know that you have been looking into that as well, can we go into a market where it will be possible for the FX market to have a T+1 in the future, or even a T+0? What do you think?
I'm, as a user of FX markets, I have to move billions of dollars over 18 countries to thousands of SMEs in a lot of emerging markets where traditional rails can be a bit challenging. And I want the best of both worlds. And I think what I see as a positive step, in fact, for almost a year now, SWIFT has been running proof of concepts, POC tests, to work on the interoperability and to connect stablecoin payment rails on the blockchain with SWIFT. So we get the best of both worlds there. Because certainly just in the stablecoin environment, we're already doing same-day settlements, and I think this year we'll start having more of that automated. Thanks to regulators supporting things, since the technology becoming institutional grade, in terms of, and also regulatory compliant in terms of monitoring where money's coming from, going to, etc. So everything we need for AML and KYC purposes. The exciting thing, of course, is that the speed of money, sometimes things get, because everyone's doing their job properly, get slowed down in the traditional bank payment rails, and you get asked for, can you provide all the know your trade, know your customer, know your counterparty details, and there's backwards and forwards and a manual process. The exciting thing with the stablecoin and the blockchain is in the future we'll be able to just push down the pipe basically all of that information, and it's all already naturally cryptographic, it's all protected, all secured, and we'll be able to automate, hopefully with the AI as well, automate a lot of that real checking of the transactions, so that we'll get less trades getting and FX movements getting held up for compliance purposes. That compliance will become a smoother engine and more automated, because we'll just be able to push more data about the whole transaction. So I'm talking about not avoiding compliance. I mean, we'll be able to make things super compliant and super fast, so very exciting.
Perfect. Thank you very much, Tom. Paul, I want to close with you. When preparing the questions for this panel, I couldn't help noticing that your recent book, King Dollar, The Past and Future of the World's Dominant Currency, you dedicate that to your grandchildren. Of course, you will always love them unconditionally, even though they grew up liking crypto. Why do you think Gen Z and Generation Alpha prefer crypto assets and not FX?
Yeah, well, yes, so if you couldn't hear that, the dedication to my book, to my grandchildren, whom I will always love unconditionally, even if they grow up to like crypto. They're 7 and 4, so they don't quite know yet about crypto. But yeah, I don't want to sound like a curmudgeon too much, but yeah, I mean, a lot of the sort of young people I encounter in the crypto-verse I think their understanding of basic economics is quite limited. Where they really deserve credit is their grasp of of software. I mean, Bitcoin is a marvel of software engineering. I think all credit is due to Satoshi Nakamoto, whoever and wherever he or she or they is. Now, the other reason why I think there's such an appeal to people of that generation is that people on both the left and the right, and maybe even somewhere in between, there's this great idealism that crypto started out with. And we are going to bypass central banks. We're going to bypass banks. We're going to bypass governments. There was all this idealism. Of course, this all started at a time when banks and central banks and governments had really screwed up very royally and during the global financial crisis. So it started out with all this idealism that quite understandably appeals to people of those generations. I can't help noticing that, and this is really not a very pleasant irony, is that a lot of the people who champion crypto in its early stages for a lot of these idealistic reasons, which I think were rather misplaced, but nonetheless idealistic. Now they are saying, crypto is going to save the dollar. Crypto is going to be great for U.S. national security. Crypto is going to help the U.S. exercise more geopolitical leverage than it does already, because they love what the Trump administration is doing. And they're, and of course the Trump family is heavily invested in this industry, and a lot of these people, I think, are seeing their net worth go up for that reason. So a lot of that idealism that appealed to young people, I'm not quite sure. Well, I guess I am quite sure what happened to it. I think it's, people are getting rich for not very good reasons. So anyway, yes, I will love my grandchildren unconditionally, even if they grow up to like crypto.
Gentlemen, thank you very much. We're up on time, so I'll invite everyone that a question. I think, do we have time for Q&A? I think so, yeah. Just, please. Thank you.
Right. Thank you so much. Well, what an educational panel, and for such reason, I thank the organizer earlier for the great selection of the panelists here. That encourages me to share a few questions. Seeing that you, or at least some of you, put the matters related to descriptions of the stable coins as if they are born equal, while some sort of granularity in the different types of stable coin could be useful depending on the extent of their collateralization. Some of them are 100%, some of them are less. So what type of provisions, first for traders, second for regulators, they have to put into consideration of that? The second point is related to the recent push by the US for dollarization. I think that goes into the excellent book by Paul, and your plea to play it in a more subtle way, and people perhaps are more anxious to see this kind of political motivation for dollarization. People in my region used to keep the dollar. Actually, they were discouraged to keep it, but they kept keeping it because of the attractions for reasons that we have seen during the years. So pushing that through the political incentives and subtle or not very subtle pressure is a bit confusing to some. And my very final point is basically about the capital flows management. Any central banker worth her salt today would really consider the kind of new tools to deal better with the capital flows associated with this new wave of trade. What could be your best advice to the central bankers in this case? Thank you.
Is that aimed to, yeah. Well, I think that the dollarization issue is one of the. I mean, there are many controversies about stablecoins, and the concern that dollar stablecoins will be pushed by the U.S. administration to and that they will not only be used for cross-border payments, which is perfectly legitimate, but that they'll be used in domestic economies. People will be buying groceries and or paying for their coffee or whatever with dollars. I think is a huge problem for central bankers. They're worried about their monetary sovereignty, I mean, one bit of advice I suppose you can give. I was just in Korea. The Bank of Korea, which is a very good central bank, is concerned about this, and they're talking about coming out with their own Korean won stablecoin, which is one way you fight fire with fire. But I suppose the best advice you can give to a central bank of a country where people are thinking, I don't want to use the local currency. I don't trust the local currency. I don't trust the government. I'm worried they're going to confiscate my assets. I'm worried that the value of my property will be inflated away. So I want to hold I want to hold property in dollars through this type of crypto asset. Well, the best advice you can give them is you better run a better policy. But that's I still think it's that's the good side of dollarization. It'll press countries to adopt better policies. But we should want governments to get there on their own. Argentina is a good example. It's really struggling. I did a book about the Argentine crisis of 2001, and they finally look like they might be getting their act together. Maybe what they desperately need is a really good monetary policy that will give people confidence in their currency, and rather than push dollars on them, which will really deprive them of monetary sovereignty and the ability to control their own macroeconomy. I don't think it's in the interest of the U.S. to push countries in that direction, because what they really need to do is gain financial stability and monetary sovereignty, and the rising tides will lift all boats. The current U.S. administration doesn't always believe that in positive sum economics, but they should.
Yeah, so maybe I can just pick up on a couple of the points. What type of stablecoin? Interesting point. So if you believe in the singleness of money, which is clearly critical to currencies, you need to be able to work in the stablecoin world where it's one for one. My dollar in my pocket is a stablecoin. That's absolutely critical. So I think that any confidence in stablecoins needs to be, if you're looking at the sort of institutional side of things, you need to be able to have what is the backing, how is it monitored, et cetera, et cetera. So you have Mika in Europe, you've got Genius in the US, the UK just published last week its stablecoin proposal, which would be 60% backed by central bank money, 40%, et cetera, because that singleness of money is important. The flip side, we're moving also, and you hear talk about this, is we move away from stablecoins and actually we move to tokenized deposits. So that maintains the banking system, and therefore you're actually moving accounts at JP Morgan, Citi, et cetera, et cetera. So that's sort of important to get that singleness of money sorted out. I think the second part about capital flows, Paul sort of touched on that a little bit. You've got the do you use a dollar stablecoin in every country type of discussion. But I think you also are getting into an interesting debate around how stablecoins work. So you're now seeing in Europe, for example, discussions about holding deposits related to the stablecoin, let's say a tether, but it'll need to be held in Europe so that you don't get capital flows where people are redeeming a coin in one country against the central bank or against the banking system and extracting euros or dollars, et cetera, from that system on a coin that was issued elsewhere. So getting that right is critical as well, and I think that will help to stabilize a lot of these discussions.
Thank you.
And I think just to stir things up a little bit, as a final comment, we talked about stablecoin backed by fiat, right? And I think that's less of an issue of concern from perhaps central bankers' perspective. I don't care because I just need to move money and move store of value and move commodities. And trade always breaks down barriers for thousands of years. It'll move where it needs to move. Bitcoin. No one's talked about Bitcoin. I have people offering me billions of dollars, institutions offering me billions of dollars of Bitcoin, and I can borrow US dollars or anything against it at a 70% LTV and make a very good margin, despite its huge volatility, and that's without any hedging on Bitcoin. So Bitcoin is being seen as a store of value. It is being promoted as a potential collateral against transactions. It's early days, but I think something very close to watch, both from a regulatory and also from a transactional standpoint as well. It's which is definitely not touching any central bank anywhere. But the nice thing about it, the one comment here is that it's not about obscuring what's going on. The nice thing which helps us as a regulated entity to use stable coins or anything is that it's on the blockchain. It can be totally transparent in real time. So, where we've actually converted fiat into USD stable coin, left it in an institutional controlled wallet like an escrow, where we need to post collateral for a regulator. And we said, here's a link. You can click refresh on your mobile phone every single second. You can see it's there. No one can fake it. The collateral is there. So there's a lot of very interesting, useful applications as well. So for transparency and for real-time regulation. Yeah.
Thank you. There's one question here at the front. Do we have time for another? Is it working?
What is the likelihood that we will see the BRICS currency succeed, especially 2/3 of the world population is countries involved in the BRICS currency, one of the world leading IT country, and the world largest factory, which is China, and countries involved, a large country of energy. So with these factors around, what is the likelihood the BRICS currency will come out, and what's the likelihood of its success?
I assume that's addressed at me. I would say as close to zero as you can get. I understand the frustration of the BRICS countries about the U.S. dollar. The fact that the U.S. has weaponized its currency, used it for sanctions purposes, and so forth. And President Lula of Brazil has expressed frustration. Who decided that the dollar should be the world's currency? It's understandably he's mystified, but the dollar is the world's currency for the reasons that I mentioned in my first response to Rui's question. But why? Even though I'm kind of sympathetic to the BRICS countries for wanting to have an alternative to the dollar, because the U.S., when it uses its dollar for foreign policy purposes, sometimes does so for very capricious and it bullies the world. I think sometimes it's done it for good reasons. I think personally, everyone has their own opinion. I think that the way it was used in 2022 against Russia was a good thing. But there have also been times when it was used against Iran in 2018 by the Trump administration, when it was really a matter of the U.S. bullying the world. So I understand the frustration, but just the way to think about the BRICS currency, I think, or the reality, the realistic possibilities for it, is to think about the euro. The euro took literally decades for all these countries to reach an agreement on how they would unify their monetary systems, give up their monetary sovereignty to one common central bank. Those are countries which have much more in common with each other, politically, socially, ethnically, and so forth, and geographically, than the BRICS countries do. Creating a common currency, and even one that's just for international transactions, among countries that are so disparate as the BRICS, even though they have a sort of a common frustration, the U.S. dollar, to create a currency among countries with such disparate governmental systems, regulatory systems, I don't have to tell you how disparate the BRICS are in very important ways. I simply don't. I think it's a pipe dream. I understand the frustration. Don't get me wrong. I'm not trying to be dismissive, but I don't think it's realistic. I think the BRICS need to figure out other ways of dealing with the U.S. use of financial sanctions.
Thank you very much. I'm sorry, we're really out of time. I'll invite any attendees that want to speak to Paul, Tom, and James, if you take opportunities afterwards. Namir, unfortunately, had to get a flight, so you cannot speak to him. But please take advantage that they all here. Thank you again, Paul, Tom, James. Thank you again, and thank you for all of you.